Hey everyone, hopefully you're having a good day. My name's Andy, my channel is Finding Value. If you like making money, subscribe to the channel. I'm looking at a whole bunch of different ways to look at the markets, technical analysis wise, fundamental wise, looking at ratio investing, looking at market conditions, real estate, and tying this all together. And I know while I was reading some of the comments, they're saying, don't get hooked on this Elliott wave. I'm not hooked on anything. What I'm trying to do is I'm trying to take a whole bunch of different ways to look at something, whether it be a problem or an opportunity, mainly an opportunity for investing. Now, I want to look at it from many different angles to see if they all align. And if they all align, that's where I think we could see potential investment opportunity. Because if everything says it's a go, that's the alignment and the confluence of information that I'm looking for. So what I did here is I'm doing platinum and palladium. I'm doing all of the analysis tied together. So this is Elliott wave, this is ratio investing, this is trend lines, this is whatever we can do to see what this investment looks like. And I mainly go off of ratios because that's where the money has flowed out of, and I go where everybody isn't. So if you're there first, you can make a lot of money because you're buying the asset at the cheapest price. The problem with that is if your timing isn't somewhat close, you could be in an asset that is undervalued for decades. And we don't live that long. I mean, you can be in it for, you could be in cost averaging in for a couple of years, but you don't want to be cost averaging in for 10 or 20 years. That's not a good investment. So what we need to do is we have to look at all of these conditions. What spurs rotation of money? What is cheap? And what do the technical analysis waves look like? What does the market psychology think of it? What does the market think? That's why I'm trying to tie this all together. Again, I'm not a pro at Elliott wave. I just kind of started looking at it because someone said, hey, you might be interested in Elliott wave theory. I said, sure, I'll take a look at it. And I'm just using it to see what other information we can gather about the markets. I'm going to still do technical analysis my old way, and I'm still going to add in ratios. I'm still doing all of those things. I'm trying to add in whatever different angle I can look at it if it can benefit us and get us in a clearer picture of where we're at and where we're going. So I'm going to jump in here and talk about platinum and palladium. So you're going to lose me. And what I have up here are 4 charts. I did a very long analysis of platinum price on the left, upper left here. And I overlaid some numbers on this for Elliott wave theory. This down here is the grand super cycle of the S&P 500 over time. On the right is our gold to platinum ratio. This tells us relative value. And then on the lower right here, this is the gold to platinum ratio. And I just left it in this format, signaling an anomaly out of 100, over 100 years. This is the cheapest that platinum has ever been. And what I did is I overlaid everything onto this chart here in the upper left. So this is the grand super cycle. I took these 1, 2, 3, 4 and did all of this analysis and swapped it back up here. I looked at the ratios and said anything that's up here in these green circles, and then I did this green circle, would be a buy point on platinum for this very long-term history of platinum. And I didn't have the ratios back here, so I didn't know if this was cheap or expensive. So if you were to look and you tied this all together, that's what I'm trying to do. I'm trying to tie everything together to give us a complete picture of what platinum looks like, and if we should, if I should buy or if I should hold or not sell or do or sell or whatever it may be. What should I do with platinum? And what I have is if we look at the grand super cycle here for the S&P 500, and if every chart is similar to every other chart, if the pattern repeats over and over and over, we should see very similar patterns when you take certain vantage points on when you look at certain chart timeframes. So this one on the right, this or S&P 500 historic here, is from the 1800s. It goes 1800s, 1900. This portion here is almost the same as this portion here in terms of time frame. This goes to 2015-ish, 16, 17, 18, or let me look. Yeah, something like that. And this one goes to 2015. And they've got 0.5 up here. This is a very close, similar chart in terms of its duration. Now, if you look up here, I labeled 1, 2, 3, 4. That's 1, 2, 3, 4. It is very similar in terms of how this thing moves throughout time to how this moves throughout time. It popped up to number 5. It popped up to number 5, which would be a new high, basically. It was right around the high here. That broke out above its highs. So this would be 0.5. We had a correction phase. It would be up as 1. So we went down and up as 1. We went back as 2, back as 2. And where I am proposing we're at, if this is correct, is that we're this circle right where the black circle here would be overlaid right where we're at here, which means this could be what's coming for platinum in the future. And you've heard me say these ridiculous numbers, and it correlates to ridiculousness if this is the right spot. And I think it is. If you look at how this thing comes, I mean, this is like a perfect match to this. This portion is a perfect match to this portion before it blew up. So is it going to blow up? I don't know. But everything aligns in terms of ratios, market conditions, market fundamentals, etc. So I see no reason why it couldn't do this looking forward. So looking at the ratios, I put the green circles here, and then I overlaid those green circles on the platinum history chart to show you where potential buy points in history would be based off of ratio investing. So the ratios here, this is basically a greater than 1-to-1 ratio where platinum was, gold was as expensive as platinum. Now, if you look in history, there were times where the ratio reached 0.15. 0.15. And if I were to just do a quick calculation here, from where we're at today, if that were to repeat itself, if we were to go to a 0.15 scenario, and gold's at, I'm just going to pick a $5,000 level, divided by 0.15, it is within historical norm for platinum to reach a $33,333 per ounce number. And it wouldn't be out of history if this went from a very large 2.3 all the way down to 0.15. I'm not saying it's going to do that. I'm just saying it's within the realm of possibility. And the green circles are buy points that it would have said you should be buying platinum here, you should be buying platinum here, and you should be buying platinum right now off of this trend line that was created here. This trend line, that's a perfect merging of information right there, because we pulled back to a trend line, the ratio shot up to an anomaly right here, and we've got a perfect spot in terms of Elliott wave. There's nothing here that I can tell that says that we shouldn't be buying it, or I shouldn't be buying it. Remember, I can't give financial advice. I say we because people are viewing this, but it's really me. I can't find a reason why we shouldn't be buying platinum. Now, let's dig into palladium, because palladium is a substitute to platinum, or when palladium's more expensive, platinum is a substitute to palladium. Now, one could say, I'll pop in here, one could say that the large deficits of palladium would also be platinum's deficit, because if they're substitutes, the deficit in palladium will affect platinum at some point. So the deficits in platinum and palladium affect both of those metals. So if you have if platinum's more expensive and you have a large deficit in platinum, it will affect palladium at some point, maybe but delayed some years. Then palladium, if you have a huge deficit in palladium, some years later it will affect platinum. That's why these ratios are so valuable, is because when something becomes cheap, the consumer and industrial user, whomever it may be, the consumer of platinum is going to choose the lower cost option. And the ratio will tell you what the lower cost option is. So I'm going to jump in here and show you palladium real quick. And palladium, I did another grouping of charts here so you guys can see this. I've got the grand super cycle of the S&P 500 overlaid on palladium. I've got the market balance of palladium on the right-hand side, and I've got the ratios of gold to palladium ratio on the right. And I'm just randomly choosing, I mean, I could have done a platinum to palladium ratio, but I chose to do a gold to palladium because gold's kind of the money accounting system. I circled these ratios where they're cheap. Anything over a 4 is dirt cheap. And what it does is if you were to look at history here, you would say, wow, this is dirt cheap. You'd have a rate, you'd want to buy here, here, and here. Those were the 3 really good buy points throughout history. And you could argue anything over 4, so you could have bought all throughout this area here. Now, I overlaid the grand super cycle just to see if we could see any sort of correlations with this. And you can, to some degree. Remember, this is more a shorter time frame up here than it is down here. But you could say 1, 2, 3, 4. This is the sideways action smushed up. This is just drawn out because it's such a lot bigger format. 5 is this big move up. You've got the move back, which is down here. You go up, which is up is 1, down is 2. Correlates. You could even say 2 is this here. If you went down and bounced up and over, that kind of correlates here. You could say that this is 2 right here. I was debating if this is 2 or this is 2, but 2 is somewhere in here. If that's the case, this was the move afterwards. You could say that this move here is actually this guy right here. It could be. So this is also suggesting that palladium has a very good future. Now, what about the market balance? The market balance here is suggesting that we've got a large deficit of palladium and much higher prices. Even estimated in 2021 and 2022, still market deficits. So this is suggesting that everything is game on, even for palladium. The wave suggests it. The ratios are saying that palladium is expensive, but the market deficits are going to continue to push rhodium and palladium and all these other PGM metals higher. Now, if palladium's going to move, and let's say it moves to $10,000 or $20,000, I don't know what the top would be, but let's just say it moves way up there. Platinum's going to follow because that is the substitute for palladium. So I'm just trying to tie this stuff all together. I'm not using one analysis over the other. I'm just trying to tie everything together to make sure that we have a well-rounded viewpoint of our investments. That's all I'm doing. If you guys like this analysis, give me a thumbs up, subscribe to the channel if you haven't already, and thank you for listening. This is Finding Value.